Music is the answer. Sweet music is the way. Gospel, jazz, R&B touches you every day. Talk about how it moves you differently day to day. It's the R&B Bistro. Letting music have its way.
Hello, and welcome to the R&B Bistro Up Close and Personal. I'm your host, Venus, here to take you through this musical dance we call life. And you know, to do that, I bring on experts in the community to give us tips to help us make it through. Today is a good day for some and maybe a bad day for others who don't want to hear about this. We're talking to the financial guru of the R&B Bistro. You've seen him before, but he's going to be coming on to give you advice every quarter so you know what to do with your taxes for one, your finances for another. So I'm so glad to welcome back to the scene, Mr. Sylvester Knox.
Hello, and certainly excited to be here and
Yes.
look forward to sharing the knowledge I have to help you save more money.
Yes, and become rich like you.
Absolutely, absolutely.
All right, so you gave me some canned questions and I kind of added some to it, but since you're the financial guru, I know you can handle whatever I might throw at you.
Absolutely.
All right, well, let's start with this one. I tell you, tax time is really rough. You said that we needed to recap 2023.
Yes.
Why? And what do we need to know about that?
Okay, so you need to recap, meaning that you need to take a look at your finances. You need to look at where your income is going. You need to look at what if you paid out. And you also need to look at what kind of taxes you're going to be paying for the coming year. So what I want you to do is take a look at what you made for the year. And so we have tables that allow you to determine what tax bracket you are going to fit in. So roughly someone making under 100,000 is going to be somewhere between 22% tax bracket. So then what we can do is take that number and we can start to subtract some things like donations. People forget that if you give a donation away, it's a tax deduction for you. So you got old clothes, you want to give away furniture, all that stuff can be recorded.
Wait. I could give away the dining room furniture that I've been trying to sell that ain't nobody buying?
Yes.
It's beautiful though.
Yes, yes.
But they want me to give it away for nothing. But if I give it away, the tax write-off could be what it's really worth right now?
That's correct.
I like that.
But it's got to be given to a facility that will give you a tax form that allow you to actually get the value of that piece of furniture. So that is a great opportunity to help reduce that tax bracket.
I like that.
Also, you're going to look at if you own any investments. There's a thing called tax losses that you can sell those positions and take a $3,000 tax break against your income.
Really?
Really.
Back up and say that one more time. I didn't get it clear.
So you can take against ordinary income. You could take a tax loss up to $3,000 in any calendar year. So that is an amazing way to help reduce what you give back to the federal government.
I like that. This is good. Starting off right. So what are a few financial mistakes to avoid this year that may have happened last year?
Well, one of the things you want to avoid, obviously, is the fact that you, depending on when you took Social Security, could impact your taxes next year.
Oh, Lord.
So I need to kind of get an idea, your age. Are you still working while taking Social Security? All those things are going to come into play. And certainly the IRS knows that if you're not at full retirement age, you're going to clearly be subject to taxes on your Social Security. So we want to make sure we avoid that.
So I don't want to give them any more money than they already take. So that brings us to how do you avoid paying too much taxes as a business? And then how do you avoid, as an individual, paying too much taxes?
Well, let's start with the business. The business, we want to start with making sure you understand your expenditures. You must have some kind of reconciliation, a line item place where you can absorb all your expenses and basically line them out. And that allows you to offset any revenues against your expenses and therefore will reduce your taxes. And also, we love to see employers who take W-2s. As an owner of a business, we want to make sure that you're maximizing your tax contributions and also maximizing your deductions. But as you taking a W-2, your whole income is a tax deduction to your business.
Wait now. So I'm a business.
Yes.
But if I take W-2s.
Right, meaning that you're an employee of the business.
I'm an employee of the business. That gives me more money?
Yes, more money back in taxes.
Ew, okay.
Yes.
I didn't know that. Y'all probably didn't know that either. That's why he's here. Now, so let's stop for a minute. Just in case we have some new viewers who are not familiar with you, to know that you are the Bistro's financial guru. Where did you start that company that you're not with anymore? Tell them that real quick.
I've been on Wall Street for the last 33 years. And through my 20 of those years, I basically worked for the large corporations in this country. And I realized that at the end of the day, they only wanted me to talk to people who had $1 million plus and up. And I just felt a little uneasy with that because I wanted to give back to my community, give back to the people in my town, and so forth. So I started the Knox Group Global Wealth Management in 2017, and we are flying and having amazing success because it allows me to talk to everyone. It gives me an opportunity that people can reach out to me directly. Not everything is about it. We don't even charge commissions anymore. So it's not about a fee or anything like that. You can just pick up the phone, or go to my website, sylvesterknox.com, and reach out, ask me a question. It's free of charge, no expense whatsoever to you. So that is my way of giving back and allowing me to help my community.
Which is all about what the Bistro do. Remember, we're here, or what the Bistro does, we're here to give to the community so they can do what you do, or so they can be better at whatever it is they do. You know, and that's why you're the financial guru. One more point I want you to bring out. While you were working for that company we're not going to name, you were in the top...
I was in the top 10%. Now, if you think about a company that has over 50,000 employees, right now they have over 400,000. And you're in the top 10%. I was the top guy there.
I think he's being a little modest because I thought I saw him in the top 1 to 3. But that's all right. He could be modest because he's the financial guru. It's okay. I just want to let you know that you are in good hands when you listen to the information from him, and that's why he's here. So now, do you advise people to do their own taxes?
Generally not, because I think they're not aware of all the nuances that go on with taxes. Taxes are changing every year.
Every year.
So, you know, it's hard for someone who's just doing their taxes right online and then submitting it because they can put the income and they got some expenses. You can put your mortgage interest in there. You can any deductions you can put in there, but you're going to miss some of the things that have come out that give you benefits. It's like the new tax rule on RMDs, which is retired minimum distribution, which means that when you have an IRA account, you have to take that money out at a certain age. It used to be 70, now it's 73.
Ew.
So you don't have to, you know, if you haven't started your RMDs yet, you don't necessarily have to start taking it, which means you're going to pay taxes. So at the end of the day, there are laws that are changing constantly, and you know, maybe if you feel your situation is the same consistently, but every other year, I would try to get a professional to help me with my taxes.
I think that's good advice. I mean, I know a lot of people who do their own taxes. I actually think I did my own taxes once and never did it again because I don't know nothing about what, you know, any of those things. And there's a lot of deductions, like you said, that we don't know that we should do, and they change every year. So let's get into this year's tax season. What do we need to know? So
we need to know, obviously, that the RMD is a big deal because it allows us to forego taking out income that will raise our tax bracket. This year, you know, after the COVID situation, people are a little more relieved getting back to some normalcy. So there is a lot going on as far as taxes goes. More people are working more than ever. I mean, the unemployment rate is at 3.7, so people have jobs. So now it's trying to figure out, you got to be very careful if you're working remotely and you're still with that employer, that you could be subject to additional tax because you're working remotely.
Wait, why?
Because you are working in another facility.
Okay.
So therefore, you're almost acting as a self-employment.
Okay.
So they want to make sure that, you know, you are still with that employer, you're at least reporting to the office at least 2 to 3 days a week. When you're solely just working remotely at home, you're borderlining on being self-employed and at the same time dealing with your own structure.
And that kind of saves them in some kind of way, right?
Yes, absolutely. Think about it. You're not paying travel expense anymore.
Yeah.
You're not.
Well, you're saving there.
Yeah, you're not buying lunch at the office anymore. Coffee, all those things are having an impact on any business whatsoever.
But a lot of them probably are not giving you back money because you're using your light and gas.
That is true too.
And all that stuff.
That's why you border on line being self-employed, because generally, if you are self-employed, you can use a portion of your home as your office,
Exactly,
and
write
that is
off.
your business, and write off that portion of your home for business expense.
Right. Lord, this is a lot of stuff, and that's why I need him, because I don't know none of that stuff, none of it. And I got too much stuff up here. I don't need that part. That's why you need him, and I need him. All right, so let's get into. Do you have anything else to add for that?
Well, I just want to circle back on individuals with taxes. Mainly, the thing here is that what I find is that people forget to take certain deductions. They remember to take their kids, they remember to do the home, they remember to do the income from work, but they forget the things that normally are the simplest things, like taking a tax write-off for lost anything you lose. If you lose an expensive item, it's a tax deduction to you. If you lost a $10,000 ring, you filed a police report, guess what? You can claim it on your taxes as a loss.
All right.
So there's some really simple things out there that could benefit one, but people don't think about.
And you can depreciate stuff
And
too, like your car. You can depreciate that.
Your home. If you have a secondary home,
Okay.
you can depreciate it.
Really?
That's right. There's
Okay.
a lot of
All
things
right.
there.
Now, this question came off the wall somewhere as I was preparing for this, and I don't know. You tell me whether it's viable. Anyway, does having a nonprofit business allow you to get bigger tax returns and pay less in taxes?
Well, there's 2 points to remember. Nonprofit means that you're not making profit.
Okay.
So that means that all the revenues you take in are going to the good of the community or wherever it's going. So it does give you some breaks in taxes. So the government's not going to tax you the same way it would do a C Corp or an S Corp.
Okay.
They're going to tax you as a nonprofit, which means that your taxes will be minimal, because you can show us proof you took in $100,000 and you gave away $100,000.
Okay.
Now, they will accept the fact that you will have some staff that you have to pay, and that'll be part of the process as well. But you can minimize your taxes from a nonprofit, yes.
All right. So if you have both, do you do separate returns?
Yes,
Okay.
yes.
I like that. All right, we're moving right along here. I'm telling you, this is going really, really fast. My goodness. So let's talk about people that are approaching 65.
Oh,
I don't know who those people might be, but
all those baby boomers,
all those
right?
people that are approaching 65.
I think it's the new 50 because it's a wonderful age.
Why can't it be the new 45?
Well, I don't know if you want to get back on a bicycle.
You know what? Moving along. Go ahead.
Moving along. But approaching 65, obviously you're approaching the age of retirement. Now, I just want to make it clear that you can start taking Social Security at 62, but it's not recommended because you're only going to get 75% of your benefit. So in this case, you want to wait until you get full retirement age, which could be 66 if you were born before 1960, or if you're born after 1960, it's 67. So in that case, you'll get your full retirement. At that point, you can actually continue working and minimize the taxes that you would basically be paying, because they won't tax your Social Security.
So did they change the year of full retirement from 67? Or is between 65 and 67 full retirement?
That is correct, yes,
Okay.
depending on your age.
So let's say you don't do it until 70. I
Right.
thought they moved that 70 to 72.
No,
No?
that was
Okay.
the RMD.
Okay.
So here's the thing. At 70, you get a bump up in your Social Security.
Okay.
If
And
you
you're
can
not
wait,
paying some
if
more
you
money.
can wait that long, you get another 25%. So some people, if financially your cash flow is fine, you're enjoying retirement, not an issue, they'll wait till 70. Now, the other thing is that if you have a spouse or even an ex-spouse, as long as you've been married for 10 years, you can claim the spousal benefit on his Social Security.
Okay, we have to stop there. Don't lose your point. So if you have a spouse
Yes.
and you're at retirement age and you want to, or whatever age, let's say you're 62, between 62 and 65, can you pull his Social Security, which doesn't affect him if he hasn't pulled it himself?
If he's retired, you can pull that Social Security as long as you've been married for 10 years.
Okay, but you can't do it if he hasn't retired
That
yet.
is correct. That's
Oh,
correct.
so then you can wait until he retires.
When
and
he
then go back and do
retires,
his?
then you can go and put in your claim and take your spousal benefit.
Okay, you paying attention to that?
Now,
ladies?
the strategy here is
And
that
husbands.
you take the spousal benefit and you hold on and let your Social Security go to 70.
Right.
And then you look at which one's going to be more at 70 and you switch them.
That's cool. What about, I think someone asked me this before, what about someone who was taking security and they died, and now their wife was taking hers, the widow was taking hers. Can she go back and look and see if his was more and then switch to his?
Well, that's still the spousal benefit.
Still the
the
spousal
same,
benefit.
yeah, it's the same
Okay.
thing.
Oh,
Generally speaking, generally, depending on what the woman did as a career-wise, she might have been a housewife. So it makes sense for her to take the spousal benefit because it's going to be more than what she would get.
even if he's dead?
Even if she's dead, yes.
Oh, that's cool. Now, you mentioned that how can you retire small? What's a small retirement budget? That's what I just
Well,
wanna know.
here's
What
the
is
thing
it?
that I want to try to make clear. Yes, not everybody's going to have $1 million in the bank and retire and live in Florida half the year and New York.
They
the
may
other
not
half.
have 100,000, but anyway, go.
So the reality is we may have to retire and still be very comfortable by taking out Social Security at full retirement age, also possibly working a part-time job. I think a lot of times we think when we get 65, everything stops. That's not necessarily. And that part-time job could be very rewarding. So not only are you making money, you're getting your benefit, at the same time, you're meeting your cash flow needs and you're maintaining your lifestyle. So there are a lot of ways to look at that, but that's one way I think we get so caught up that we have to have enough money to retire. Not necessarily. You just got to have a strategy that will allow you to live in retirement comfortably.
I like it. So at 65, if you work, or is it 70? At 65, can you work and make as much money as you want? 'Cause I know it's capped for somebody
at
62.
full retirement age.
So at 70 then?
No. At 66.
At 66.
66 or
You
67.
can work and and make as much money you want. But
That's correct.
if you're 62 and you're still working, I think
They
it was
are-
like
they-
18,000
Well,
or 21.
it's a limit. It's about 18,000, 21,000.
That's crazy.
a
It's
year.
your money you put in all these years. Why they got to limit you?
Well,
That's me wanting to buck the system. Don't listen to me. Listen to him. I'm not the guru. All right. So where should we be investing our money right now? How has it changed since last year?
Clearly, this economy is based on the people, right? So I'm going to simplify it in the sense that 70% of the economy is the public. It's them spending money, transacting business, buying cars, homes. So when the economy is going well, that's because Americans are spending money. So what I want you to kind of focus on is those household things that you use and see every day. Costco, why is their stock $400? And
Wow,
nobody
really?
talks about it because they make a lot of money. And so there are opportunities there. Technology, we're all talking about this AI. How do we, as the public, benefit with AI? Not only technology-wise, but financially. There are a lot of ways to do this. So the goal right now is to stay invested. The market has outperformed every investment in any consecutive 10-year period in any time in history. So you're not going to beat the market. So stay invested.
Cool. All right. I think you kind of talked about market conditions right there.
Yes.
Right. Okay. So we'll move on for that. Let's do something fun because our
Okay.
time is running out, and I like to ask you off-the-wall questions that you may not want to answer.
Okay.
So,
Okay.
if your life
Uh-huh.
was a song, what would it be called?
It would be called Happy Days.
Happy Days from the sitcom, or some other Happy Days like some other artists?
Well, I was thinking of the singer, So I'm Happy.
Oh, I got it, but I'm not going to sing it right now
can't-
because I'm not in voice. But I know. Okay, yes. All right, well, that's good. Now, if you had one day left, and this is kind of morbid, but it's not really morbid. It's thoughtful,
Okay.
okay? But if you had one day left to live, how would you spend it?
I would spend it with probably my family. I would spend it with my family just to say my farewells, goodbyes, and to know that I don't want them to be sad.
Yeah.
I want them to celebrate
Yeah.
because at the end of the day, I'm celebrating.
You brought up some emotions because today's a difficult day for me.
Yes.
We won't say what it is, but today's a difficult day. But
Yes.
let me just say, this show is dedicated to the memory of my mother who passed away 2 years ago
2 years
today.
ago,
So
yes.
emotional. But anyway, moving on. What is the one thing that you would tell little Sylvester at 10 years old?
Oh, there's so many things I would say.
just need one,
You
you
just
know
need
how
one. Basically, absolutely stay in school. I mean, without a doubt, it builds structure, it gives you direction. And even if you want to do something that's totally not aligned with education, college, you at least have that structure.
All right.
So staying in school is important.
Okay. Did little Sylvester at 10 know he wanted to do this?
Yes.
Wow. Okay.
Yes.
I need you to, if nothing else, I need 3 tips, but if
Okay.
nothing else, the one thing that our viewers need to take away today is what?
Is stay invested. I mean, it's a proven track record. Yes, there are years the market goes down. Yes, there's volatility. Yes, there are crashes that happen. But in the end, the market will outperform. So, stay invested, stay fearless, and get a financial advisor. There is no reason why you should not have a financial advisor. It doesn't cost you anything, just to talk to somebody. Now, if then you want them to do some work for you, then you work that out. But at the end of the day, have a professional that can guide you. It can only help.
Stay invested.
Yes.
Get a financial advisor.
Yes.
3.
3, your health is your wealth.
I like that, definitely. All right, it's been so great. Tell our viewers where they can find you.
They can find me. I'm right here locally in New Jersey. They can find me in Short Hills, New Jersey at 51 JFK Parkway. They can certainly go to my website, sylvesterknox.com, or you can just call my office at 973-218-2496.
And you'll be back another quarter next
Yes,
quarter, right?
and I will be back next quarter, and we will elaborate on some other things I think will be very helpful for you.
All right. Thank you for being here, Sly.
Thank
as
you for
usual.
having me.
This is Venus from the R&B Bistro, up close and personal. Remember, it's never too late to live your dreams. And when you do, I'll be there encouraging you. I'm on all social medias. Be sure to connect and tell someone about the Bistro. We love you for watching. Come on back next time to see who we chat with. Bye now.
Music is the answer. Sweet music is the way. Gospel, jazz, R&B touches you every day. Talk about how it moves you differently day to day. It's the R&B Bistro. Let the music have its way. Music is the answer. Sweet music is the way. Gospel, jazz, R&B touches you every day. Talk about how it moves you differently day to day. It's the R&B Bistro. Let the music have its way. Music is the answer. Sweet music is the way. Gospel, jazz, R&B touches you every day. Talk about how it moves you differently day to day. It's the R&B Bistro. Let the music have its way. Music is the answer. Sweet music is the way. Gospel, jazz, R&B touches you every day. Talk about how it moves you differently day to day. It's the R&B Bistro.